Hello folks, this is Raj Sastry from Raj Option Trading. Today I want to talk about option trading ideas and stock trading ideas for the week of May 10th. So many folks are interested in the stock and option trading ideas, and this will give you a good idea. So with that, let's jump in. So we will look at three strategies here. First strategy is Ttm Squeeze. It's a trade the market strategy by John Carter. So with this strategy, we will look at long, meaning buying the stock, or call spread. Next, we'll look at low volatility and low RSI, relative strength index. Whenever the volatility is low and there is a low RSI, that's a good time to buy stock. That's a good entry point, and also good time to buy call option or call spread. Typically, we buy call option or call spread below the current stock price, so that way we get some good appreciation. And there is also, another strategy is high volatility and low RSI. When there is a high volatility and low RSI, you end up, you can end up selling put options. If you sell put options or put spreads, you will get some good premium. And because there is a low RSI, stock can appreciate. And you can also buy the stock because there is a low RSI. That means stock is sold off. So because stock is sold off, if you buy the stock at the time, it's a good entry point. So with that, we'll look at primarily long strategies in this segment. You can also do short strategies in the similar way. As an example, in the TTM squeeze, if you see there is a negative trend, negative bias, you could sell a you could sell a call spread at a higher price, or you could also buy a put option. So you could also do a little differently, but primarily today I will cover buying call or call spread, or buying stock, and also selling the put spreads. So with that, let's jump in and go into a little more detail. So this is the list of stocks that we have. Uh, this is based on a TTM Squeeze Indicator, and this is where you can buy the stock. It will give you a good entry point, and it will basically tell you stock is going to explode higher because the Bollinger Band gets inside the Kelton tunnel. So that's a good idea. The moment it does that, it has to release the energy. It can release the energy on the higher side or the lower side. So we want to look at where it will release the energy on the higher side, so stock will explode higher. So with that, these are all the stocks we have. So the way I organized is really I looked at TTM squeeze indicator for 1 day, 3 day, 1 week, 1 month. So the stocks here are primarily, they have either a 1 day squeeze or 3 day squeeze, or 1 week squeeze, or 1 month squeeze. Whenever you see one or more squeezes at the same for the same stock, that's a good indicator. I think we don't have any in this right here. But if you see a squeeze forming in 1 day, 3 day, 1 week, 1 month, that's a very powerful setup. With that, let's jump in. What I've done is really I looked at all the stocks with a very good liquidity or a volume, and also I also looked at sales and sales growth. Typically I like to invest in the stocks which are fundamentally strong. As you can see here, I highlighted few stocks here like Eldorado Gold, Pitney Bowes, SVMK, and these stocks have got very good sales and sales growth, as you can see here. Doesn't mean there are other stocks are not good. For example, there are stocks like say Sensat, or even Holy Frontier, Alaska, American Airlines. These are also good stocks. Only criteria right now is they don't have a good sales growth, which is understandable because they are recovery play at this point. You could even invest in this. It's okay to invest in these because these are also good companies. So with that, I like few of these stocks. We'll jump into that in a little more detail. And this is one strategy. This is where the TTM squeeze from John Carter's. I got here one page, and I got one more page here. I got a couple more companies here. Many of you know companies like PayPal, and also there are other companies here like Blink, NVT, Novax. These are all good stocks we can play. This TTM Squeeze Indicator. Next, let's look at one more strategy here. This strategy is really low IV percentile and low RSI. So whenever there's a low IV percentile and low RSI, because there's a low IV percentile, when you buy the call option or a call spread, you're not paying too much premium because there's a low IV percentile, you're paying a low price. So that'll lead up to a good appreciation in the call or stock or even call spread. So we want to look at if you see here, I got IV percentile right here. As you can scan through this, all this IV percentile, this is below 50. So below 50 is typically it's a lower IV percentile, meaning you can buy the call option or call spread, even a stock. When you buy options, you don't pay much because IV percentile is low. I also made sure the RSI is below 55, so these are relatively low RSI, and you can you can look for some appreciation, because the moment RSI is low, that means stock is really oversold and ready for a bounce back. And also I highlighted the companies which are good from a sales perspective, good sales growth. Primarily I will look at those, and you can also look at other companies like On Semiconductor, and even beaten down stocks like Park Hotels or UAL. Those are all the good ones. And even First Solar, as you can see here, Norton LifeLock, I love those stocks also. So that's the second strategy, which is low IV percentile and low RSI. And I got one more page of the second strategy, which is low IV percentile and low RSI. And the third strategy is really high IV percentile and low RSI. This is when you buy the stock or sell put spread. Because IV percentile is high, as you scan through this, IV percentile is really above 50 in all the cases. And in some cases here, like Apellis Pharmaceuticals, it's 94. So the moment IV percentile is high, you're getting good premium for selling your put or put spread. And because RSI is low, stock is really oversold. It's ready for a bounce back. So that's a good strategy to buy stock, because you're looking for appreciation. RSI is low, meaning stock is beaten down and ready for a bounce back. And I got few more stocks here with high IV percentile and low RSI. You could buy the stock outright or sell put or put spread. So with that, let's jump in and look at some of the strategies here. So let's first look at a couple stocks here. For that, I will quickly scan through this and pick some stocks here, no particular reason. So as you look at here, Eldorado Gold, $11 stock. They're off 23% from 52-week high. They have done 15% in 1 year, and they got good institutional ownership. PC ratio, put call ratio indicates it's high, 2.3, meaning more people are buying put than selling call. And RSI is relatively high, 51. So I would probably pass this, mainly because RSI is a little bit higher for me. I would love to see RSI a little bit lower. And also because there is a high put call ratio, people are buying more put than call, indicating there may be some, people are hedging on this stock. And also they have done very not so great for 1 year. I would not bet on a stock that has done 15% for 1 year. So I would go through this and look at a couple more here, and look at as an example, look at Nectar Therapeutics here, $20 stock. They're off 24% from 52-week high, and they got a high float ratio, or short of float, and they have done just 1% in 1 year. So if you look at the RSI here, if I go all the way here, it's 53, a little bit high for me. I will pass this one also. And as I scan through this, I am going down here. Village Pharma, I think here stock is at $11. And as you scan through this, they've done okay from a 1 year sales perspective. Gross margin is a little bit lower for me, but let's see how it will pan out. They got the weekly squeeze here. And as you scan through this, they got earnings coming up on 510, which is actually in a day or two. And as you look at this, it's actually tomorrow. You are really buying the stock just before the earnings. We can look at how it will pan out. It's a lower price stock. Let's look at this one, VFF. Let me go back to Thinkorswim here. So VFF, let me go to, yeah, let's look at VFF. So if you look at VFF here, as you can see, a stock has been doing a little bit okay. It went up here, high over here. Now they're kind of trending down. Now there's a candle which is green, which is positive here. They did earning here, stock sideways. Earning here, stock went up. Earning, stock came down. Now there is a earning coming, and from a volume on the balance volume perspective, pretty steady. Check-in money flow is indicating money is flowing into the stock, which is a good story. And implied wall, as you can see, the implied wall is very low. IV percentile is very low. And if you look at DMI, DMI is indicating, the blue line here is showing a tick up a little bit, and red line is a little bit here. Right now, it's showing a bearish indicator. Let's look at the TTM trend indicator here, VFF. As you can see here, I got a squeeze here in the 1 day chart, and as you can see here, I would love to see this wave, which is okay. It's on the above the line, which is good. But this wave here, I got a little bit problem with this, because normally I like to see the light blue on the top here. Right now it's the dark blue, meaning it's bearish, and it's kind of deciding where to go up or down. So I would not take this setup at this point. I would pass this one and look at one more trade. And for that, let's scan through this here. I like this American, electric AEP, also $87 stock here, and they have a daily squeeze here in daily chart. Nice sales growth. I love this. And as you look at this, IV percentile is 0. Wow, that's very low I've seen so far. And RSI is 51, a little bit higher, but it's okay. And as you scan through this, they've done 14% for 1 year. I think many of these utilities are a little bit beaten down at this point. And earnings is coming. They are done with the earnings. It's 8.5. So let's look at AEP and see if there's a setup here. So first I will go to a bigger chart here. Let's go to chart here. AEP, as you can see, a nice looking chart here. They had earnings right here, and I think it went okay. Stock is trading sideways, and they're above 50-day moving average, and they're trying to bounce off of 25-day moving average. And on the balance volume is pretty steady. RSI is low, and IV percentile is 0. And as you can see here on the check-in money flow is showing some slow tick up. I think overall I feel it's a okay setup. And let's go to TTM trade indicator here. And as you see here in the TTM trade, I see a dot here. Squeeze is trying to form here, and as squeeze is trying to form, the longer term wave, which is C wave, it's above 0 or above the line here, and also it's a light blue, meaning it's showing it's a bullish sign. If it's a light blue above the 0 on the C wave, which is the wave here, it's a good setup for the trade. And as you scan through this on a 2 day chart, it's kind of showing some positiveness. It's a wave is blue above, light blue above 0. That's good. And I think there's also a squeeze trying to form in the longer term monthly here. and also the wave here, the longer term wave is above zero, shorter term wave is trying to, at least the bar is getting shorter, this can go on the higher side. So I like this setup. I would probably initiate a quick trade here, $87. Let's go to the trade tab here. So if I go to trade tab here, AEP, so I would go maybe 103 days out, and $87. I would do maybe 1890 spread and see how much I will get for this. How much should I pay for this? So 1890 spread. So if I do this, I'm paying $6.25. It's a $10 wide spread. So what I will make is really, it's remaining a portion, which is $3.75. I don't like that risk reward. I'm paying too much. So what I will probably do is I'll do let's see, 1895. So if you do 1895, we are paying $7. It's a $15 spread, and remaining, around $7.52 is your profit potential. That's a little bit better margin, or a better risk reward. So if I confirm and send this, I'm paying $748 for this spread. My break-even point is 87.48, which is just above current stock price. And my profit potential is 752. So it's really doubling your money type trade here. You pay 748 and you'll double your money. If the stock goes up, and your max profit is 752. I think this is okay from a risk reward perspective. I could take this one. And you can also do multiple things. If you don't want to spend $7.48, if you're conservative, you could also do 85.90 spread as an example. If you do 85.90 spread, it's a $5 worth spread. So if you do something like that, it's 85.90. You're just it's a $5 spread, and you're paying $2.50. Remaining $2.50 is your profit potential. This is also very low price. You're risking 250 to make 250. That's a good risk reward. You could confirm and send this too. So with that, let's look at a couple more ideas. Let me go back here. So we looked at American Electric Power. Then there are other ones here. I also like Expedia. As you look at Expedia here, it's a reopening play, and we have a 3-day squeeze. Normally 3-day squeeze will last a little bit longer than the daily squeeze. So if you look at this here, stock is at 173, and they are just 7% off of their 52-week high. And as you scan through this, their RSI is 50, mid-level, IV percentile is 0. We could look at this trade. It looks a little intriguing. You could see this also, given they got right now sales is low because these folks are really struggling with the COVID issue. This could be good from a reopening perspective. Let's quickly look at Expedia here. EXPE. So let's look at the chart first, and then let's jump into trade tab. So if you look at the chart, a bigger chart here, Expedia, I think stock is doing pretty okay. They're trying to bounce off of their 25-day moving average at this point. Implied wall is 36. And as you look at here, RSI is it's at 50. It went up a little bit. That's a good sign. Check-in money flow is indicating money is flowing out of the stock at this time. Not a great sign. Let's also look at TTM Squeeze chart here. If you look at the TTM Squeeze chart, as you can see here, we got dots forming in the daily chart. We got a dot in the weekly 2-day chart. So as you'll see here on the daily chart here, the line is above 0 on the C wave, longer term wave. It's a little bit lighter, darker color blue, meaning it's a little bit bearish at this point. And as you scan through 2 day chart here, that's a little bit positive here, but I see a small red line forming here, so which means it's not a great setup. So I would love to see at least not a red line forming, instead maybe a maybe a small blue line forming on the top. So with that, I would skip this one here and go to the next idea. For that, let's look at, let's see here, probably let's go to the next slide here. PayPal holding, I think this is a good stock. Stock has been beaten down off late. It's off 18%. And as you see here, they got RSI is pretty low, 44, and IV percentile is 0. So let's look at PayPal and see if it's a idea to do something here. So PayPal, as you can see here, stock is doing a little bit. They're trying to recover a little bit, as you can see here. Nice on the balance volume. I like it. It's going up. People are buying into the stock. RSI is trying to tick up. That's a good sign. And DMI chart right now, the red line is above blue line, but red line is going down a little bit. I think blue line is trying to go up. That's a okay sign. And implied wall is low, as you can see here. Check in money flow is indicating money is flowing out of the stock, which is not great. Let's look at TTM trade here. From a TTM trade perspective, we got a dot here, which is in the weekly chart. As you can see here, we got the small yellow lines forming. It's getting shorter. That's okay sign. On the longer term C wave, the light blue lines are above 0. That's a bullish indicator. And I think here there is nothing much, but it's above 0. So I think because we got a weekly squeeze trying to form here, and the wave is above 0 here, I could I could buy the stock. It's a okay setup. Actually, it's a good setup. So with that, let's go to trade tab here. So if you go to trade tab here, PayPal, I would go maybe 131 days out. And right now stock is at 253. All-time high is at 309. So there is a good room to run. 253. So we'll go somewhere here, 250. I could do. So here they don't have too much, too many price points. I would do 250, 260. Let's see how it is. So if you do 250, 260, you are paying $4.60 for a $10 wide spread. So your profit potential is really $5.40. So that's a okay risk reward. You are doubling your money. And if I confirm and send here, my break-even price is 254, which is just above the current stock price, and I'm paying $460 to make 540. So I'm a little more than doubling my money. That's a good risk reward ratio. I can confirm and send. And if you're a little more conservative, you could also do something a little different. So if your hypothesis is the stock has run up last year very nicely, I'm not very sure. So if that's your hypothesis, you could do a 240 250 spread. So if you do that, you are paying a little higher, as you can see here. You're paying 500, 555, and your profit potential is also a little bit lower. Your profit potential is 445, little less than double. But your break-even point now goes below. It's 245. So even if stock goes a little lower, you can still withstand. So this is a little more conservative play. You're paying a little more money. You're not quite doubling your money, but you're making some good profit. So this is a conservative play, and you could do something like this also. And if you're really bullish, you could even do a little differently. You could do say 240 250 spread. This is also a very good way of doing it. So if you do 240 260 spread, it's a $20 wide spread. So you're paying $10.15 and remaining $9.75 is your profit potential. And if you do this, if the stock stays about 250, you'll break even. So it's again a conservative play, and you're paying, you know, your buying power effect is 1050. That's what you're paying for this. You're paying 1015 to make 985. So this is a conservative play. It's almost doubling your money, but it's a wider spread. You're paying a little more for the spread. So depending on what you want to do, you could do this also, or you could do other two spreads that I talked about. So with that, I think we'll go to the next strategy. Next strategy is really low IV percentile and low RSI. Same story here. You could buy the stock outright because there is a low RSI, meaning stock is sold off, or you could buy call or call spread. So what we'll do is we'll look at one or two here. We'll not go into too much detail. One of my favorite stock is say IIVI here. We could do that too. Let's look at IIVI. So if I look at the chart here, so this is really not John Carter's Ttm squeeze. It's a normal low IV percentile and low RSI. So as you can see here, this IIVI is trying to bounce off. They had earnings here, stocks sold off. Now they're trying to make a comeback here slowly, and right now they're below 50-day moving average, 25, and even 10-day moving average. So on the balance, volume is trying to go up a little bit, meaning people are buying into this stock. RSI is trying to go higher. I like this. It's a good setup here, trying to go up here. DMI perspective, I think basically red line is above blue line, indicating it's a bearish sign. But I could see maybe a blue line is trying to make its way up slowly, and red line maybe trying to go down slowly. And check in money flow is trying to stabilize and maybe trying to go up. And volatility, the implied wall is down. That's what we want it to be when we are option buyers. So with that, let's jump into option chain here. I have VI $63 stock here. I would probably go into 15th October, give us enough time. And I think stock was all the way $100, 52-week high. So I could do in this scenario, I could do 60-70 spread. So if I do that, I could buy this 60-70 spread. So I'm paying $4.30 is a $10 wide spread. My profit potential is $5.70. I'm more than doubling my money. So I could do something like this. If the stock stays above $64.30, I will break even. I don't need to wait till expiration. I can sell my spread when I have good profit and take my profit. So that's one way to play. And if you don't want to spend $4.30, you could even play a little safely. This has got $5 spread. You could do 60-65. So instead of 70, go to 65. You're paying $4.40. Remaining, it's a $5 spread. Remaining, say $2.60 is your profit potential. You're more than doubling your money. This is the other way to do it. If the stock stays above $62.40, you'll break even. So this is the other way to do it. And let's maybe look at one more stock in this strategy. Whip Shop, Magnite. I also like Magnite. It's a good stock. It's $35 stock. Let's scan through this a little bit. IV percentile is 40. That's low enough. And RSI is 42. That's also low enough. So you could buy Magnite outright. It's a 44% off of 52-week high. Or if you want to play options game, you could buy some options also. So with that, MGNI, Magnite, Inc. So if I go to the chart here, As you can see here, Magnite is, I think they're trying to make their way higher. They got one green candle here. And as you can see on the balance volume is pretty stable, trying to tick up a little bit, which is a good sign. RSI is trying to go up a little bit, also good. Right now it's a bearish, as you can see here. Red line is above blue line, but blue line is trying to tick up. As you can see here, red line is trying to come down a little bit. Implied wall is right now it's around 50, but IV percentile is low, as you can see here, 39.2, and money is flowing into the stock. As you can see here, check-in money flow is indicating smart money is flowing into the stock. So with that, let's go to the option chain here. $35 stock. You could buy the stock outright here, or if you want to play options game, you could do, stock is at 35, you could do 30-40 spread easily. So there you go. So if you do 30-40 spread, your $10 wide spread, you're paying $4.45. So remaining, $5.55 is your profit potential. You're more than doubling your money here. If I confirm and send, you're paying $4.45, you're making $5.55. So that's a good risk reward ratio. You could take this one. And I think that's, I think because they're at 35, that's the best strategy here. So next let's look at maybe one more in this group. Let's go to the next slide here. So as you can see, there are various these stocks here. One of my favorites is Enphase Energy. It's one of the solar plays. As you can see here, stock has beaten down 46% down, and they got RSI is low, and IV percentile is also very low. That's a good setup for Enphase Energy. So let's get in here and let's go to the chart here. So as you can see, Enphase Energy is it came down drastically after the earnings. As you can see here, now it's trying to make a base here. That's when we typically like to come in. As you can see, our RSI is really beaten down. On the balance volume is trying to stabilize at this point, and check-in money flow is pretty stable, constant at this time, flat. RSI is low. Right now, as you can see here, stock is bearish from a DMI perspective. Red line is above the blue line, but the distance, as you can see, it's, blue line is showing some sign of improvement slowly. I think it's a good one. Even though it's bearish right now, it's a good time to really buy. Looks like there is also some squeeze forming here. Let's look at the squeeze chart and see if we see anything on the squeeze side. So as you can see here, from a squeeze perspective, we are not looking at squeeze for this one, but as you can see here, there is a squeeze forming. Line is low. There's a light blue, dark blue. Right now it's above zero here. And if you look at longer term weekly chart, there's a squeeze about to be formed, and longer term wave is getting shorter. So as you look at here from the squeeze perspective, it's trying to tell you, hey, be careful. But I think it may be okay to buy this one. We are looking from a beaten down stock perspective, from a low wall perspective. Let's go to option chain here. So $122 stock. As you can see, a stock is trying to bounce, as you can see here, after the bad earnings. That's when you typically want to get in. So now $122 stock. So I can go here. I could do, if I'm conservative, I could do 115, 125. That's a good spread to buy. It's a $10 wide spread. So I'm paying $4.78. So remaining $5 and say 22 cents is my profit potential. I could confirm and send here. As you can see here, I'm more than doubling my money here. If the stock stays above 119, which is below the current price, I will break even. I think this is a good risk reward, for this call spread. And if you want to buy just a call option, I would suggest you doing maybe delta 70 or so, somewhere here. You could pay $25 and buy this, a little bit riskier strategy, or you could even buy stock outright. So next, let's go to next strategy here. I also love Fastly. It's beaten down at this point. They had a, I think their guidance were tad lower. Same strategy. I think I love this stock. You could do this also easily, and our percentile is so low at this point, and RSI is also so low. So if just to see this are here, FSLY Fastly. So as you can see here, it's a trying to bounce off right now after the bad guidance debacle. And if you want to buy this, you could go here, $41 stock. You could do 35-45 spread easily. So if you do that, there you go. You're paying $4.98, remaining $5.02 is your profit potential. It's a double your money type, proposition here. You could, confirm and send here. You're paying 498, making 502. Your break-even point is 39.98, just below the current stock price. So with that, let's look at last strategy is really high IV percentile, meaning if you sell put option or put spread, you'll get some premium in. And also because RSI is low, you can even buy the stock outright, because these are stocks are poised to go up, stocks are oversold at this point. So with that, let's look at a couple ideas here. Probably let's look at um, I'm trying to go through this quickly and see what's a good candidate here. EA is one of my favorite stocks. We could do EA. Stock is at 142, and they are $5, 5.20% off of 52-week high. That's one idea. Let's look at that one, and also we can look at other ideas. Let's first look at EA. So if you look at EA here, IV percentile is 55, a little higher, and I think it's showing some bearish sign, bullish sign here. RSI is trying to go up, and DMI, the blue line, is crossing over red line, which is a bullish indicator, and check-in money flow is indicating it's flat. IV percentile is above historic IV. That's a good sign. It's going down a little bit. I would, to be frank with you, I would not sell put option at this time, because see, trend is down here. I would like to see the IV at least trying to go up a little bit. Right now it's trending down. I would not sell put option at this time. Even IV percentile 54, 55 is a little low for me. I would pick another candidate. So with that, let's go back here. I'm trying to scan through this. IV percentile 63 for sale point. That could be a good one, but they're 27% off of their high. I think that's also okay. So let's pick sale point. I love sale point. It's into security and single sign-on type. They will keep your software secure. Let's look at sale point. It's one of those beaten down stocks off late, with the people moving away from growth stocks. I like the IV kind of staying steady here. IV is 62.9, and as you can see here, check-in money flow is indicating money is flowing into the stock. That's what we want when we are selling put or put spread. And RSI is trying to go up, which is also good. So with that, I feel comfortable about this one. And if I go here, sale point, because I'm selling put, I want to be less time, so I don't want to have a good exposure from a time perspective. And stock is at 46, so I could let's see a delta 22, and delta 50. 50 is too high. 42 is is money wise 35, which is very low. You're you're bringing in 35 cents, which is too low from my perspective. But we could do, if you do if you do a spread, 40 and 35 spread, you are bringing in some amount of money. I think that could be better idea here, but it's a little riskier. But let's try this. We could sell vertical, selling 40, buying 35. I'm collecting 75 cents. So I think this is probably better idea. My exposure is $5, as you can see here. For $5 risk, I'm bringing in 75 cents. If the stock goes above, above 40, then I will keep my money, the entire 75 cents. So it's not a great risk reward, but being a put seller, you actually take some amount of risk. This may be okay amount of risk. So if I confirm and send, if the stock stays above 39, I will break even, and my max profit is $75 here. My max loss is 425, which is 500 minus $75 I bring in. So this could be okay proposal here. I could confirm and send. Let's look at one more idea. So as we scan through this, we got let's see here, a new relic. As you can see here, it's a high IV percentile. I think this could be a good one also. Let's look at new relic. And I think there are a couple others also. Let's look at new relic. So new relic, as you can see the stock chart here, it's trying to stabilize. As you can see here, right now it's below 50, 25, 10-day moving average. I think implied wall is taken up. Blue line is trying to go up slowly, and check-in money flow is going down, meaning money is flowing out of the stock. I don't like the risk reward here too much, because stock is showing some bearish sign here. So let's pick a next candidate. Silvergate, our percentile is a little low. Everbridge, Adaptec, EHang. EHang is another stock that might bounce off. Let's look at EHang. Let's see new 55. Fate Therapeutic also could be okay. $76 stock. Let's look at Fate. So here, I think from a chart perspective, this looks a little better. As you can see, on the balance volume is pretty steady. RSI is trying to stabilize here, and DMI blue line is trying to tick up, which is a good sign. And check-in money flow is kind of, at this time it's going down, which is okay, I guess. So with that, let's look at option chain here. Fate Therapeutics. So I would do same thing, because we are selling the put. We want to be at least less exposure. Let's look at 40 days out, and stock is at 76. You could this is a lot of money here. So $60 spread, you're making good amount of money, as you can see here. The bid ask spread is a little high, so you got to be a little careful. Mark is here. If you sell 55 put here, you could make about 50 cents. Or you could do 55, 60 and 55 spread. So if you do that, so you're selling this spread here, so you'll bring in $1.55 for this $5 spread. I think this is a good risk reward. If the stock stays above 60, which is which is like highly likely, you'll bring in $1.55. If you confirm and send here, your buying power effect is 345. That's your risk. and your max profit is 155. So I think it's a good proposal here. You could confirm and send. It's a 40-day exposure here. If max you will lose is 345, but max you will gain is 155. So with that, I think that's probably the last one. So with that, thank you very much. Happy investing and trading. Please subscribe to Raj Option Trading. Thank you.